Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: financial topics, commodities, and or wealth building. Let's dive in. Let's see what people are sharing on social media. You want to follow me at finding_finance, and if you want to join our community, finding-value.com, where I go over individual companies, individual sectors, strategies, entry points, what I'm buying, when I'm buying, and why I'm buying something. We still have a coupon code that is active, LEAP, L-E-A-P, if you would like to use it. Description link below if you want the details. So Rock Creek Freak. Via the EIA, current drilled and uncompleted wells, as well as the relative Duke drawdown percent from the absolute peak in oil basin Duke of 7,844 in June of 2020. So here's the oil play drilled and uncompleted wells, 7,800 something wells for all of these basins or shale plays, all the way down to below 3,000. On a percent basis, given all of these areas, you can see the drawdown percentage. Some of them are down almost 80% in the Eagle Ford and Permian, really drawing down those drilled uncompleted wells. What does this mean? What is this telling us for these drilled uncompleted wells? What it means is that we've been using inventory and drawing down our inventory of what's been drilled. And we're going to have to replace all of this with more drilling in the future. That's what it means. It means that energy service plays are probably going to make a comeback here very soon as oil prices get driven to the upside from this Duke drilled uncompleted wells basically being dried up. Coming on down, there it is. The shale merger frenzy is finished, and U.S. oil production is now tumbling. From Goldman, pipeline implied U.S. lower 48 crude production has declined nearly 0.4 million barrels per day since December to 12.6 million barrels per day, with 160,000 barrels per day week-on-week drop in Genscape data. So here's the U.S. lower 48 crude production declines nearly 0.4 million barrels per day. There we are with the declines over here. This is what it looks like for the Genscape U.S. crude oil production by region. And then we see the movements up and down and a potential decline here for total U.S. dropping quite substantially. This is very interesting. It's going to get me. So I'm already pretty bullish on oil. This data is going to get me too bullish on oil. It's going to make me want to buy more energy service companies and even more exploration production companies that are buying back shares, because this is going to drive the price of oil up. Those Dukes that we just looked at and the decline in oil production, it screams higher oil prices. And if we can't reverse this, I don't know what that means then. I'm not saying that we can't reverse it. I'm just saying if it doesn't reverse, it paints a pretty dire picture. Excellent graphic from that person illustrating that there have only been two major copper discoveries in the last 10 years. Where will the new supply come from? So these are copper discoveries from 1990 to 2021. Look from 2009 onward, we've had very little discoveries in copper. Hardly anything after 2014. Two copper discoveries, guys. This looks pretty dang dire. And oil production is the same exact thing as this. We are consuming more copper, oil, whatever it is, than what we are finding. So, again, this is going to get very interesting from a price perspective of all these different minerals with such little findings and replacements of reserves. First leg of the oil bull thesis is flatlining oil production. So Ted Frost says, I post this like once a month, but still staggers me to see how much the lower 48 production comes from recent wells. 50% of production, of horizontal production, comes from wells that are less than 18 months old. 50% of production. So we need to drill like heck to keep the oil flowing. Otherwise, we are going to go into a decline. And we have to continue to drill with the same intensity or greater just to keep this thing from declining rapidly. Here's China and gold. So Chinese gold imports are surging in January of 2024. And I guess that's what we saw with those pictures of all the people in the line buying physical gold. So that is a pretty monstrous candlestick here compared to previous January candlesticks of how much gold has been imported. Gold to Dow Jones Industrial Ratio still squeezing into a corner. Are we breaking higher or are we breaking lower? That decision hasn't been made yet by the markets. I am very curious to see which direction it goes. Down, I think, is going to be the case because I think we're entering a commodity bull market. And gold, I think, will outperform the Dow Jones. Now, wouldn't it be something if this broke to the upside, did a false breakout, and then ripped lower? that would be enjoying to see that. MSCI World X USA, so it's excluding USA, on the verge of a 17-year breakout. Here we go, baby. This is when that dollar drops. I think we're going to see gold go up, oil go up, copper go up, all of the commodities go up potentially together. And I also think if the dollar drops, we're going to see the world, MSCI world, go up against United States, without the United States. This is Suncor. Suncor is a large Canadian oil company. And this is a representation similar to the ETF that we were looking at. That was, what was it? I can't remember the ticker symbol now. It's the large cap oil companies. Either way, this is breaking to the upside already. We are starting to see breakouts to the upside of some of these oil companies. Now, we need to make sure that they are sustaining breakouts, that they break out, do not come back and do a false breakout, and get some monthly closes above these highs. I think it's a legitimate breakout. That's my first initial take on it. But we got to make sure, we got to start closing some monthly candlesticks up here above the resistance lines that we've got. But Suncor is above resistance, and hopefully we can close up here. Precious metals have been rallying. Are mining stocks next? The lack of capital interest and scarcity of geologists and other workers entering the mining industry is setting the stage for one of the most supply-constrained environments in history. Miners to gold ratio, again, that's our XAU to gold ratio that I always chart. We haven't broken out yet, but this is sure getting close, guys. And when we break out of here, which I think is going to happen here shortly, I am going to turn into, which I already am, a massive bull on the miners. And it's always best to be early than it is to be super late. And if we can get a breakout here, I'm going to love the outperformance of the mining companies coming up. It's going to be a very, very big move, in my opinion. with a massive runway of valuation ahead of it where the miners could drastically outperform for a long time. Very interested in that sector right now. The Kobayashi letter says, breaking, new home prices are now down 20% from their highs in bear market territory and falling faster than rates seen in 2008, according to Misinformation Reventure Consulting. New home prices peaked in late of 2022 at 497,000 and have fallen to 401,000 as of the latest data. New home prices dropped by 23% from 2007 to 2010, according to Reventure Misinformation Consulting. They're down roughly the same amount in just 1.5 years or half the amount of time. Still, new home prices are 20% above pre-pandemic levels and existing home supply in near record lows. Is the housing market beginning to crack? This guy just doesn't know how to read data. So this is the median sales price of new homes. That does not mean that you've got a home price crash if you take the median sales price. A home price crash would occur on a square foot basis. And we're not seeing that. I'm sorry, they're selling a lot more smaller homes that people can afford. And it's not actually a price crash when you hold certain things constant. I'm sorry, it was a nice try, but please try again. Coming down, fantastic looking technical chart for gold. Gold has broken out of its 4-year consolidation. Guys, I know people are going to say, we've broken out, we should be bullish. But there's some people out there that say, well, you shouldn't be bullish at highs. I am when it breaks out of a cup and handle. I am bullish. I will be bullish. We'll be bullish for a long time until this runs out of steam. And I think that we are very similar to some early market move of what I think is a big bull market that's going to occur in gold. We have a long runway ahead of us. And gold is cheap against the M2 money supply. It's cheap against stocks. It's cheap against a lot of those other assets. XLE trying to break out from a 16-year base. I had to look at this chart again. Peak, false breakout, coming all the way down, hitting our head. This is ready to rip out of this resistance zone. Whenever you start tapping on the resistance zone multiple times like this, hit, it's eventually going to break. And I think we are going to release from this resistance level with a ton of energy and go into hopefully what is a new entire big bull market in energy stocks that brings us to very elevated levels. Think of some of these agricultural futures pricing like cocoa and stuff like that. I think it's going to do something very similar. Very similar. And I think we're going to get tight in oil here. Very tight in 2025. When everybody's on the same side of the boat, technology is the total year-to-date flows into equity funds by sector. Look at energy over here. No one's in energy. I am so bullish in energy. And what's going to occur is we're going to be in this, hitting our head. When we break out of here, this is going to rotate over here, and technology is going to fall down. It's going to move left to right. This is going to move right to left. Energy, I think, is probably the best, one of the best sectors at this moment. And anything that moves with energy. There's other, fertilizers, agriculture is looking pretty strong. Copper could look pretty good. And even precious metals they look pretty dang good here. Here's lumber, the broadening plot, looking for a breakout, which would target $156. Monthly 20 moving average is the blue, which is this blue line in the middle there. That's the 20 MA moving average. It's considered for support, and it looks like we're ready to break out to the upside for lumber. What does that mean? It means we're in the expansionary phase of real estate, the same expansion phase I keep talking about. If here's the if, a big if Reventure Misinformation Consulting, if we were really in a bubble and we were getting these huge price drops, then tell me why lumber is breaking to the upside. Ding, ding, ding. It's because he's wrong. I'm sorry. This is why we're breaking. We want the confluence, which is the gathering of information, to all read the same. Completions are at 1.7 million. Housing starts are above 1.5 million. And lumber continues to go higher. Are we in a bubble? Decidedly not so, says the 8 ball. Coming down, Russian government tells oil companies to cut output to 9 million barrels per day by end of June. Is this going to push oil prices higher? And what if the shale in America is actually peaking? This is going to get very interesting. That's what I think. Peter Thiel, Jeff Bezos, and Mark Zuckerberg are leading a parade of corporate insiders who have sold hundreds of millions of dollars of their company's shares this quarter in a signal that recent stock market exuberance could be peaking. NASDAQ price, sellers to buyers, and we've got a lot of sellers out there with the NASDAQ potentially peaking. I don't know what's more ridiculous, the countries that announced voluntary cuts or the people who believed in the OPEC plus cut is real. This is the seaborne net exports OPEC plus countries which announced cuts for 2024 quarter one in November, increased to a new high of 0.8 million barrels per day above 2023 quarter four average levels. So they are producing more. Now here's the thing. If we are producing flat out almost, and we are still in a tight market, what's going to happen if demand exceeds the entire pumping capacity of the world? Inventories will drop, oil price will move. That is what could potentially occur. Freight futures in the AM update, we've got Capesize and Panamax down 4% and 3%, while tankers are flat. That's what we saw today. Rick Rule says there is no class of securities that I know of that has more volatility to the upside than silver stocks in a silver bull market. You got that right. When you go back and look at history, you see these gigantic impulse moves higher in silver when they break resistance levels. We are trying to break a resistance level right now, and we could see another one of those vertical moves in silver. Commodities have broken out of the bull flag. The next inflationary impulse is likely upon us. This time, I expect silver to get angry, and that's right. But this here is your CRB Index, your Thomson Reuters Core Commodity CRB Index. Bull flag breaking to the upside. Yeah, that's exactly what we're waiting for, guys. Big consolidation, a false breakout slingshot cheat to the upside, another consolidation, and a break to the upside. Here we go. Beginning of the move, baby. Here comes wave 3. Navi says today's infrastructure spending is likely to dwarf what we experienced during the rebuild period post-World War II by the U.S. and the rest of the world. Excessive levels of debt often precipitate escalating geopolitical tensions and conflicts, and disagreements among nations intensify. There arises a greater imperative for countries to bolster their self-reliance on domestic operations. These circumstances are poised to catalyze what could evolve into one or more ambitious infrastructure initiatives in history, with the potential to be highly inflationary. The last major infrastructure push in the United States occurred in 1956, with the National Interstate and Defense Highway Act under President Dwight D. Eisenhower, initially budgeted $25 billion, equivalent to approximately $270 billion in today's currency. This initiative pales in comparison to the recent Infrastructure Investment and Jobs Act, which authorizes government spending nearly 6 times that amount, totaling $1.2 trillion. In this chart, We also consider the Inflation Reduction Act passed in 2022, expecting a significant portion of those funds to be directed towards new infrastructure projects, including those associated with the Green Revolution and other initiatives. Here's the Inflation Reduction Act. Boom, boom. This is what's coming. 1.7 trillion. And that is a 3x times the amount of money that has been spent in previous spendings. Just to let you know how big this is coming. So big spending coming out of that. And that's where I'm going to end it. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And that's all I've got for today, guys. So we'll catch you later. This is Finding Value.